So our job within this is now not get philosophical and tribal about where do I invest in that technology and screw it up. Our job is to maximize the opportunity to the best we can. And that's a balance of how do you take risk? Because a lot of people go, max 10 risk. Like, no.
Yeah.
Look, if it's going for 2.5 trillion to 100 trillion, you don't need to take max risk. You can just capture the bulk and then do a bit of the tail on the side.
Now, guess who keeps his eye on us? The author of best-selling book Rich Dad, Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. In today's video, this week Raoul Pal discusses his exponential age thesis. Raoul will dive deep into why liquidity will resurge into H2 2024, why diversification is dead, financial repression, the fourth turning, and how all these factors impact markets.
90% of my liquid net worth is basically allocated right now to Solana. I moved some from ETH. I don't have much Bitcoin right now. Doesn't mean I don't like Bitcoin. I just think the others go up more. Simple as that. I own a bunch of high-end NFTs that I think I have another thesis about. And then beyond that, I do a bit of speculation and other stuff for the fun of it. But the time horizon thing is, I can see it freaks everybody out. And I've stepped back, and it was only in the last 2 weeks I've realized the risk, the real thing that's going on crypto Twitter, and why the banana zone resonates and why you get this backlash is this is everybody's hopes and dreams. It's everybody's. It's yours, it's mine, it's everybody's. Right, so they're so scared of it going wrong, yet they're so greedy to get it right. This is the struggle that everybody's having. And people have PTSD from the last cycle, as the people did from the previous cycle. Right, the previous cycle was the blow off top and then the collapse. This one was the stunted top and then the collapse. And so now people, they worry about the cycle. I don't remember Jeff Bezos caring about the business cycle. He just owned his stock. If you're in a secular bull market, there is demand for the good that you produce, in this case, block space, premium block space, then why the fuck are you trading it? What you should do is buy all the sell-offs. If it goes down 85%, you're like, hell yes. It took me a long time to realize that, because I too was the macro kind of cyclical guy. And I think, well, let's sell at the top. So I think I can predict somewhat the tops from the everything code cycle and the usual bunch of stuff. But does it really matter? As a 30-year-old, yeah, okay, you might want a house. So there's lifestyle chips. Okay, fine. But I tell you, if you've made a ton of money and you take it off at the high and you nail it, you will not put the same amount back in at the low down 85%. When everybody's calling you a criminal, they're going to shoot everybody involved in crypto. There's going to be the gulags for crypto investors. You're like, I'm not doing it. And you will end up screwing the whole thing up. The other one I was talking to Chris Badisky about is people are really getting concerned about, where does the top come? Is it early? Is it normal? Is it, every time it's always been December, but for some reason everyone's freaked out it's going to be a different time now. Okay, fine. And that's because of PTSD. But it's not that. I don't know. We don't know. None of us know. Is it going to be a bubble top? It's going to be, it doesn't matter. What is the one that scares me is what happens if the correction in 2026, because we don't have 22, we don't have it, beating out of massive inflation and the pandemic stuff. Imagine if we just only went down 40% in Bitcoin and 20% in NASDAQ. This is kind of my favorite probability. Sure, there's a whole bunch of alts that are going to go down 99%. I'm just talking about Bitcoin. Everybody's going to miss the trade because they're waiting for the down 70.
Bitcoin's ongoing downward trend is true to what experts at 10x Research predict could be the lower target for BTC price. They'd warn that this steep decline may just be the beginning, with Bitcoin potentially dropping further to $50,000. Breaking the psychological level at $60,000 toward $50,000 marks a significant shift in market sentiment, which 10x Research attributes to buy flows drying up while sell flows are accelerating. Marcus Thielen, an analyst at 10x Research, suggests that the downward spiral was foreseeable, stating, Our data from early June already hinted at an overbought market ripe for correction. On June 24, Thielen shared the following chart projecting Bitcoin's break out of its consolidation range and decline toward $50,000, citing the potential realization of a double-top pattern. A double-top pattern forms when the price reaches two similar peaks with a slight dip in between, maintaining support above a common line known as the neckline. This pattern typically resolves when the price breaks below the neckline, potentially falling by an amount equal to the distance between the peaks and the neckline. As we've observed over the past 3 months, range trading is a complex phase, often marked by several false breakouts, Thielen wrote, adding, topping formations have historically left the average retail investor vulnerable, with many altcoins experiencing significant drops. In contrast to Thielen, Michael Van de Poppy, founder of NN Capital, has a slightly higher target for Bitcoin on the downside. Van de Poppy predicts Bitcoin will break below the May 1 low at $56,000 to collect the demand-side liquidity lying under it before declining to $52,809. From a technical perspective, the Bitcoin price action has led to the formation of a classic bear flag pattern, a bearish continuation setup that forms after the price consolidates inside an upsloping range, following a sharp price decline. Bear flags typically resolve after the price breaks below the lower trend line and drops by as much as the previous downtrend's height. This puts the lower target for Bitcoin price at $49,200, levels last seen on February 12. Additionally, Bitcoin's daily relative strength index is oversold at 29. This explains the intensity of the ongoing sell-off, boosting BTC's chances of reaching its bear flag target.
I mean, I've explained there are two assets in a secular bull market, technology and crypto. Arguably, crypto is technology, but that's it. So number go up the most. We've gained through the fastest period of change in technology in all human history. We've just brought into the world infinite human intelligence to the power of whatever. We don't even know to the power of what? The power of 10, the power of 100? We've just replaced humans by robotics. We've got cars that drive themselves. We're able to edit the human gene. We've got just La La Land stuff going on, the book of sci-fi novels. And these are companies with products. We're not even talking about them anymore. These are actually happening. And people want to invest in old stuff. Because, hey, it's cheap here. You're like, what are you missing? Do you really think anybody cares about your gold mine? Really, when you've got what's going on? No, that doesn't mean all these stocks go up forever. It doesn't mean they don't go into bubble cycles. It's none of that. But it's like, if you are to choose an asset in a highly correlated world, choose the best performing asset. Let's say you don't trade crypto. You're doing yourself a disservice if you don't own technology. And I can hear people now going, well, he's just a bubble. It's all a bubble. You need real cash flows and real this. It's like, yeah, and look what happened to Amazon and Google and Facebook. I mean, it's all mid-curve. And I don't mean that as an insult. We've all been there. It's like, once you simplify it all down, stop all of the monkey voices in your head. Filter out all of the noise from Twitter. It's like, is tomorrow more digital than today? Yes, no. If yes, continue. It's as simple as that. It's like the world is going to be more digital tomorrow. End of story. So even if you do have a bubble cycle and then a crash, what should you do? You should buy more technology. Why? Because tomorrow's more digital than today. Well, I mean, it's really, I've really got it down to the most ridiculously simple theses. And it's embarrassing. I know it's embarrassing because people are like, this guy's a moron. I'm like, I've done, honestly, it's 35 years of work on this. I think I'm right. But, we'll see.
The collapsed Japanese crypto exchange McGox has transferred 47,229 Bitcoin, worth $2.71 billion at current prices, to a new wallet address in its first major transaction since May. According to blockchain analytics platform Arkham Intelligence, the exchange transferred the Bitcoin at 12:30 a.m. UTC on July 5 out from cold storage. The movement comes amid the exchange's scheduled plan to begin repaying creditors this month. A total of $8.5 billion worth of Bitcoin is slated to be paid back to creditors. Several market commentators voiced concerns over the sheer volume of Bitcoin that could hit the market following McGox creditors selling their holdings, which have been inaccessible for more than 10 years. However, other analysts work to allay fears of a massive sell-off, saying the total amount of Bitcoin that stands to be dumped on the market is probably closer to a value of around $4.5 billion. Galaxy Digital's head of research, Alex Thorne, suggested that many Mt. Gox Bitcoin holders might be more diamond-handed than anticipated. He highlighted the potential adverse impact of capital gains taxes for those who wish to sell all their BTC at once. On May 28, Mt. Gox transferred nearly $7.3 billion worth of Bitcoin to another unknown wallet address. The price of Bitcoin dipped as much as 9% afterward. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.